Thank you for joining us at xm.com for today's daily market comment by Hera Lambos Pisuros. I'm Christina Marucos. The US dollar finished Wednesday mixed against the other major currencies and continued in a similar fashion today. It is trading higher against the risk-linked Aussie and Kiwi, while it is down against the Japanese yen. Against the rest, the greenback is trading in narrow ranges. Yesterday, it was all about the US data. Both headline and core retail sales for December fell by more than expected. Industrial and manufacturing production prices also disappointed, while producer prices slowed by more than expected in yearly terms. This may have refueled fears about a recession in the United States, with the PPI data adding to the narrative that inflation is likely to continue cooling in coming months. As such, investors may have remained convinced that the effect of the previously delivered rate increases is not fully felt by the economy yet, and that the Fed may be forced to cut interest rates at some point later this year. The reason why the dollar did not fall after the data may have been safe haven flows. That said, even if the dollar continues to act as a safe haven for a while longer, it is unlikely to reclaim the status of the ultimate safe haven. With Treasury yields declining, investors may prefer gold and the Japanese yen, and thus the US dollar may resume its latest downtrend soon. The yen is the main gainer today, reversing all the losses it recorded after the Bank of Japan's decision to stick to its ultra-loose monetary policy. After yesterday's decision, investors may have just pushed their expectations about the Bank of Japan's next move to the April meeting, after Governor Kuroda steps down and after the Shunto spring wage negotiations. Therefore, with the Fed expected to cut later this year and the Bank of Japan seen removing more accommodation, dollar-yen may be destined to continue drifting south. Following reports that European central bank officials are considering slowing their rate increments at the March gathering, the euro has been trading numb, with euro-dollar closing below 108 yesterday. Today, we get the minutes from the latest ECB meeting, as well as a speech by President Lagarde. Should the minutes have a hawkish tone and Lagarde reiterates the view for more double hikes, euro-dollar could rebound and resume its prevailing uptrend. Wall Street suffered yesterday after the weak US data pushed back on the soft landing narrative, with all three of its main indices losing more than 1% each. The S&P 500 and Dow Jones recorded their biggest daily slides in more than a month. It seems that bad economic data is slowly becoming bad for stocks. Actually, some economic weakness is expected to be reflected in the current Q4 earnings season, with year-over-year earnings from S&P 500 expected to have declined 2.2%. Thank you for watching today's Daily Market Comment here at xm.com.